Yo, Judah Hoover, what's up, man? How you doing?
How are you, dude? I'm doing awesome. I'm living the dream. I'm rocking and rolling.
Living
Uh,
the dream. That's awesome. I love living the dream.
well, here's the thing. First Friday of the month is always crazy because there's so much economic data to
Yeah,
digest and look at. If only there was two people that somebody could tune into on a regular basis and get
no,
an update on what the latest economic data is and what it means to me. Wouldn't that
I
be great?
know. It's absolutely insane. I wish someone would come up with a show just like that.
Dear listeners, this is Judah Hoover. I am a realtor. That guy over there is Josh Weidman. He is a hard
What's
money
going
lender.
on?
We've both been real estate investors as well for several decades. This is the Build and Grow with Real Estate show. And we come to you every day at noon with content, hard hitting information, what's actually working right now in the real estate world. And hey, Jeremy, thanks for joining us. And one of the things we do on Friday is we break down the news of the week, specifically the first Friday of every month. The government says, "Hey, here you go, guys. Here's a whole bunch of new information, and here's a whole bunch of stuff. Specifically, the jobs numbers, which we're going to get into, updated unemployment. Now, these obviously get tweaked and adjusted and corrected later on, but we've got first read on a lot of these jobs numbers,
And
and we're
I'm
going to talk
calling
about it.
BS. I'm calling BS on one of them, and we're going to have a conversation about that in just a minute here.
Yes.
Um, all right.
Surprisingly, Josh and I sometimes disagree on all of this stuff.
All right. So let's jump in here. Let's get rolling. First news item of the day. I might want to share my screen here. That might help.
Yeah.
There we go. All right. Our first news item of the day is that it seems there are a lot of experts that are coming out right now talking about, maybe this boom that we're having in real estate, it might be a heck of a lot more sustainable than people really will admit. There's a lot of doom and gloomers out there in late 2019 into early 2020, myself included. I thought we were due for a correction, due for a downturn in pricing because housing prices were increasing much faster than the income levels, right? And so it was reasonable to think that, hey, in a very short future, what's going to happen is there's going to be a downturn in the housing market. Then we have COVID, and now prices are out of control. Properties are getting bid up. There are a lot of people talking about bubbles.
Yeah. So whether we see a bubble or not is something different. Whether we see a correction or not is obviously, open for discussion. But one of the things that people see as a positive sign in the economy right now is especially in middle America, is people moving out of the cities and millennials buying houses for the first time
Oh,
and settling down.
hold your horses. Hold your horses, man. You got to keep up with the slides here. We got to
Oh,
pace ourselves. We're going to be
am I
done with.
jumping? Am I jumping ahead? Am I jumping ahead?
Well, so like this is the thing, right? Everybody that's watched this show, I've probably given 3 dozen reasons why the housing market's going to crash tomorrow.
Right.
Judah has smacked me around a couple times on the show, and said that, hey, look, like there might be a downturn, but the more information that we get, the more we come back to reality. What we realize is, look, in the short term, if there's a downturn in prices, it's not going to be a truck driving off of a cliff.
Right.
It's
We're not
going
going
to
to see
be
2008 again. I don't think we're going to see that again.
no, it's going to be parachute, hang glider type, decline where everybody can see it coming. It's going to happen slowly, likely, but we also could be in a market, in a situation, and some of the numbers kind of indicate that we're not really in a bubble. We are in a kind of economic change and a socioeconomic change where people's buying habits, certain things that are happening with the demographics of the country, certain geographic pushes, maybe lending to a much longer term acceleration in prices that's going to be more maintained over time than we originally thought.
I think one of two things is going to happen. We're either going to see a slow correction, an acceptable correction, not a huge fall off. I mean, I still think that there is a 10 to 25% chance that we could see a correction, or we see growth for the next 2 to 3 to 5 years.
Yeah.
Now, who knows? At the end of 2 to 3 to 5 years, depending on how much we buy and depending on what happens, there might be a massive fall off at that point.
Yeah, but that's
however, I just don't see cliff-like scenarios anytime in our future.
Yeah, and there's a couple factors for this. Number one, millennials are entering the marketplace. Now, this was something really interesting that I read this week, is that there is a 20%, historically speaking, you look back at the difference between home ownership for individuals that are under the age of 35 and the the age group of 35 to 44. There is a 20% jump in that age group, and it persists in all kinds of demographics, all kinds of age groups, whatever, over time. And so what the initial prediction is that there's going to be a heck of a lot more millennials entering the market over the next, now and moving forward for the next decade at least. Now, and that just adds to a larger demand in an economy or a housing market right now where we have no inventory and a ton of demand. Right. So we got low supply. Home builders and local regulators have limited the number of homes that are being built.
Not in my backyard. No one. I mean, we see this a lot in central Pennsylvania. Everyone bemoans any building that happens or any building that goes up, and yet no one wants their kids living with them for the rest of their life.
Yeah, absolutely. And you know what? It's really interesting. You've seen some new construction starts recently, but not a ton. And a lot of that can be attributed to the timeline of getting permits approved, to break ground. And a lot of these new home builders are in cash crunches right now because they live on draws, right? Like they're building these new developments and they have to meet certain benchmarks. Well, guess what happened a couple months ago? No, like they couldn't go to work. We had all these housing developments shut down. And so you've got kind of a catch-22 here where we have a huge demand. And if they had finished houses, they'd probably sell them really quickly. But we also have a cash crunch in a cash flow situation with the builders where they don't necessarily have the capital to go out and build the houses. So it's a kind of interesting dynamic. You also have these ridiculously low long-term interest rates. Like, holy mackerel. We've got news here in a minute about the amazing historically low interest rates once again. It's like week after week we hear a couple basis points coming off, or even if the numbers go up a couple basis points, they're still so stinking low. It's like free money almost, and there's a ton of money being pumped into the economy. So you've got and
we're going to talk about why there's so much money being pumped into the economy and why they're actually trying to create inflation in our next story.
Yeah. And then last but not least, you have the COVID factor. You have regional increases in demand based on a migration of populations away from large metro areas to more suburban and smaller urban markets. And so what you have is you've got a shift in housing prices. I mean, I saw an article this week in Manhattan. They're giving away free rent until next year if you move in now. Like there's so many vacancies. You're talking about 3-4 months of free rent before somebody's got to pay a monthly rental payment. And a lot of that is because people are leaving New York.
Right.
Yeah. All right. So bottom line here, big takeaway. Look, if you're wondering what's going to happen next in the market, I think that we are going to be able to see what's going to happen 2-3 months out. Right. And it's not likely, even though we talked to Jason Sanseverino. Did I say that right?
Sanseverino. Close enough.
Sanseverino. Jason, I'm sorry. A couple weeks ago, and he talked about upcoming foreclosures that'll be hitting the market second quarter of next year. That doesn't mean that the truck's driving off a cliff. It just means, hey, we can see the numbers coming. There might be a slow dip, but guess what? That's the spring market.
We're going to go from no foreclosures to some foreclosures.
Right. Exactly. That's exactly right. All right. So let's move forward here. Let's talk about European deflation. Right now, yeah, go ahead.
What's funny about this story is the way it's been reported every place is negative inflation in Europe. And what's troubling about it is they don't want to mention the word deflation. It's funny right now in the US, we have this whole like counterculture movement, say his name, right? You know what I mean? Like if we're trying to brush something under the rug and we're not trying to talk about it, there's all these protesters now out there chanting about this cause or that cause, say his name, say the name. It's deflation. Europe is heading into deflation. They had a 0.2% negative inflation in August, and in September it was up to 0.3%. That is deadly. Here's what deflation means. Inflation is my dollar is only going to be worth 80 cents in December, so I better buy Christmas presents now. You know what I mean? A little bit of inflation is a good thing because it creates economic movement. Deflation is negative because deflation says, well, my dollar is going to be worth $1.50. So I'm not going to buy Christmas presents now. And maybe I'll just buy my kid an Xbox in January when my dollar is worth $1.75. Yeah. Now, those are extremes, and obviously, if anybody has any of them dollar Xboxes out there, let me know. But what happens with deflation is it puts the brake on spending. It makes everyone save and hoard their money, not just as individuals, but also institutions. And the gears of the economy grinds to a halt, and Europe is facing it right now, and it is very scary stuff. So this is another one of those stories that says to me, I've always been long-term bullish on America. America's goal is, number one, to have a good economy, but number two, have a better economy than the rest of the world. And as long as we are better than everybody else, if we're doing mediocre to okay, but they're doing really bad, that's actually not that bad for the U.S. It's like being the smartest kid in the class. How smart are you compared to everybody else that's around you? And there's only one planet. There's about 200 economies, and the U.S. continues to be the number one economy. So hate on the U.S. all you want and say that there's all this negative economic stuff all you want. America is awesome.
Okay, so on that note, I'm going to jump on your back on this one in a good way, right? Here, look at the numbers. So over all of the economies, over everything that's bought and sold in Europe, that you've got deflation. But what you really have is inflation in food, alcohol, tobacco, and services. Things that normal people buy are costing more.
Right.
Industries are suffering because there's huge deflation in energy, and there's deflation in the cost of non-energy industrial goods, which means buying raw materials to make stuff that people are going to buy, it'll be cheaper tomorrow to buy them.
Right.
So if I manufacture them today, it's going to cost me, like you're saying, $1. If I do it tomorrow, it'll be 75 cents. Well, if my competitor is doing this stuff tomorrow and I'm doing it today, my goods are going to cost more than his. Right. And so, that's one of the reasons that their economy is stalled. It's not that they have, the cost of goods are up for normal people and they're down for businesses. And, that's not a great position to be in overall.
No, it can unwind really quick, and it can. And the other problem is with inflation, there's a number of things we can do to fight inflation. We can raise taxes. We can raise raise interest rates. We can pull money out of the monetary system. There's a number of things we could do to cut inflation. It is very difficult to cut deflation, to counteract deflation without actually sparking inflation and hyperinflation. Yeah. So it's why I think that we're going to see home values go up because, again, as we fight deflation, we're going to see inflationary stuff, and gold and real estate are the two hedges against inflation.
Yeah. All right. Let's look at the mortgage data for this week. Mortgage demand fell by 4.8% last week. This is kind of a fake number, because if you go a little bit farther, purchase applications were down 2%, refis were down 7%. But year over year, purchase apps are up 22%, refinances are up 52%. I mean, that's a huge
right. The week over week number is down because no one was applying for a mortgage because they were all tuned into the train wreck that was the presidential debate. And so,
dude, I felt like I was watching my 9-year-old and 5-year-old screaming back and forth.
That was awful.
5 minutes. That's
so,
all.
What's that?
I could only get through 5 minutes.
Oh, really? No, I watched every painful, bloody minute of it. So, but listen, I love Christopher Hitchens and Sam Harris and Dawkins and Dinesh D'Souza and Jordan Peterson. Like, there's a lot of really good long format debaters out there. These guys are just amateurs and have no idea what they're doing.
Yeah,
that's the problem. And also the other thing is they're both as bad as the average person in America would be at a long format debate too. So
this is the quote of the day here. No nursing home theater.
Yeah. So everyone was tuned into the debate. No one was applying for mortgages for purchase or refinances. That's why the week over week numbers are down, but year over year we are way up.
Yeah,
way up.
The good news
which just signals increasing strength.
We got another 30-year low in the mortgage rate, 3.05% for a 30-year fixed conforming loan. What that means is that's the average. That means that some people are getting a 2.9% rate, and some people are paying 3.2%. But with 20% down, 30-year fixed rate conforming loans, 3.05%. It's down 5 basis points from last week. Origination fees are up slightly to about 0.5%, which they were about 0.5% a week ago. But still a great time to get a mortgage or a refi. It's good time to buy a house. All right, weekly unemployment news. Now, Judah and I have a big disagreement on this.
I can't believe this is the chart you used. I sent you like 18 charts.
Yep.
And this is the one you use? Oh, you used my one chart from Market Watch. Market Watch has a great story out today.
Yeah, Market Watch is a great site regardless. I used 2 charts because I wanted to show some side-by-side data. And there could be a number of different things going on here, but I thought this was a striking contrast when charts are great, but they're only as good as the data. It's like having
make your point so I can refute it. Go.
It's like having a really good CRM. Here's the bottom line. Weekly numbers. New unemployment claims, 837,000. New pandemic unemployment assistance claims, 650,120. Continued claims, 11.8 million. Continued unemployment claims. Now, these numbers are what we see here is that 26.5 million people received some kind of jobless aid during the second week of September. That's 500,000 higher than what we saw in August. That's the first thing that I see. Second thing is personal income declined by 2.7% in August. That's not great.
No, personal income decline is not good. Also, I love that, the U.S. officially thinks that there's 12 million people out of work right now. The way they slice the numbers one way, but then they look at the number of people they're writing checks to, and they're writing checks to 12 million.
Yeah.
26 million.
Right.
That is a whole lot of fraud going on, my friend.
Well, it's either fraud or somebody's twerking the numbers. And that's what I want. That's exactly what I'm trying to say here is that, all right, Labor Department comes out and says the economy added 661 jobs last month. Okay. The unemployment rate went down. Now, if you look at this CNN graphic up on the top right hand side, you'll notice that consistently there's about 1.4 million people applying each week for these new unemployment benefits, whether they're initial jobless claims, or they are the unemployment assistance, pandemic unemployment assistance. So by my math, and it's not the best, it might be new math that they're using, but 1.4 times 4, that's close to 6 million lost jobs. Is that right? Does that make sense? Like, is my math? Let's call it 5. Let's go
here's yeah. So here's what I know. We've added 600,000 new jobs this month. Net new jobs. There are 660 more people across all segments. The market was looking for a number closer to 800,000. It got 600 only because about 200 less thousand people were employed by schools and other things like that, because with all this online learning and stuff, and the market didn't know how to factor that in or figure that out. I really like it, and it's a political neutral chart. People are using it for political gain to beat up on Trump. But is this good, Josh? Does everybody see this? This starts from a baseline of 4 years ago. And we can see all through Trump's presidency his added jobs. In February, we had a huge drop off. And then since then, we've been building back. The challenge is, obviously, they say we've slowed down or it's lost steam or whatever, but we're still making progress, and we're still coming back. And if you look at how far we've come out of this hole we were in, we're I think we're making a lot of really good progress in the economy and in the jobs world. And I think that we've got a lot of good stuff going on.
I'm not trying to down anything. I'm looking at the numbers, and it just doesn't make sense to me. You're telling me that we added 6.6 million jobs. There were 6.6 million vacancies filled for jobs over the last month.
No,
that would surprise me. That's all I'm saying. It sounds like an awful big number.
Listen, I'm just telling you what the way they calculate the jobs number. I mean, the way that they've always calculated the jobs number, we've added 660,000 new jobs in a month. I've been watching the jobs number for 15 years. And anything north of 200,000. This is the other thing is look at hold on, I'm gonna Google something here really quickly.
While Judah does his homework, we'll talk about why this.
No, I'm serious, because there's a really good
podcast. No, so
all right, hold on, I'm taking over again, Josh.
You got it. Who, you? Me?
No, me.
Okay. All right. Come on, man.
Look at this. This is what I love. Do you see this right here? Are you seeing this?
No.
Did I not steal the screen? I stole the screen. Share.
It's not. I'm looking at it. There we go. There you go, Judah. You're in.
Oh, I didn't steal this. I didn't show this screen. So this is what I was saying from 4 months. I didn't share it right. So this back here is a baseline of when Trump took office, right? And then we go up and up and up and up and up. These are all jobs. I'm not saying Trump's amazing or whatever. I'm just saying, baseline for Trump in office. Please, digest that dispassionately. Don't send me your Trump hate mail. And then in February, when we shut everything down, we had this big trough, and we've started coming up since then.
Yeah.
So you can say we have lost steam in the fact that this most recent step isn't as big as some of these big recent steps, but we're not still going down. We're not losing jobs. We're going in the right direction. Okay, Here's another chart that I really like. This, and what's funny about this is you could go back 20 or 30 years, and this is what this chart would look like. Little teeny tiny changes on a month by month thing. Each and every one of those things is a month change. And then COVID hits and we lose all these jobs, right? Well, since then, we've been recovering and we've been replacing. Now, we're not adding jobs quite as fast because a lot of people are distracted by the by the election, and because some, there's places like New York that are still like half shut down, and there's clubs and bars and restaurants that still can't hold people. It's only been recent that we can go back to church in Pennsylvania. So I mean, we've got a far way to go, but like I just think all of the jobs numbers are trending very positively. I like
Okay.
where we are.
Okay. All right. I'll take it. I'll take good news. Look, sunshine and rainbows.
This is
Unicorn.
the Sunshine and Rainbow show.
Listen, I love it. I love it. All right. Not so great news on last night. If you woke up this morning and found out that our president has COVID, you are among friends here. Yeah, apparently Joe Biden slipped him something at the
Right. Well, I like that. A liberal friend of mine said, and she likes to think of herself as a non-liberal, but she is, said on Facebook today that, Trump having this and Trump deserved this is like saying smokers deserve to get lung cancer. It just comes across as callous and mean and cold and nasty. And I thought that that was a very good, fresh take. Also, listen, I mean, the chances of him actually having complications, the chances of him actually, all he did is test positive for this. I think that the market is overreacting. The Dow is down, crude oil is down. I think all of this is overreaction. What's going on? He is relatively young, relatively healthy, and I don't think that this. I think this is a nothing burger of a story.
This might be a blessing in disguise for the Trump reelection campaign. I don't think you even realize that. So this is a big one. This is a little bit of a stretch, but if they quarantine Trump and quarantine his phone and his Twitter account during this time, his silence might lead to a reelection. If we just have to go on data and no personality, right, man, it could be a landslide. All right. So that's kind of big news. It's a little bit scary with the uncertainty. Anytime you have a U.S. president that potentially it has a life-threatening virus, it's not something to just thumb your nose at. Our thoughts and prayers are going to be with the president and his wife, that they recover quickly and and all that. All right, man crush news of the day: Halloween. Elon Musk and the Crew Dragon is going to take the second group of astronauts to the space station.
Really?
Yeah, Halloween. Yep.
I did not know this.
They're going to be wearing masks. It's going to be good. This is a larger spacecraft than what they used before. Number one. Number two, it's the first time that an international group of astronauts are going to be launched from U.S. soil in a in a
private vehicle.
Yeah, in a private vehicle.
So it's bigger. So it's bigger because it's carrying 4 instead of carrying 2. You're saying?
It's a larger aircraft, from what I understand.
Gotcha.
Yeah. So I mean, that's kind of cool. It's good news, right?
That's amazing news. That's very exciting news. I got to tell you, it's an exciting time to be alive.
It is. I mean, the technology out there right now is just insane. It is insane. It's like living in Star Trek, or Star Wars.
Listen to Jeremy here. I want my flying car.
Well, what's really interesting is I watched the special on the new Tesla batteries that they're trying to develop, and they may actually be able to produce a flying vehicle that will be akin to, like, it'll be a spinoff of Uber for a higher level clientele, and there'll be like autonomous vehicles that fly through there, autonomous taxis, and they'll likely be more expensive to begin with and all that kind of stuff. But they're 2 or 3 person manned vehicles that would fly through urban areas and stuff like that where there's high congestion of vehicles. So that's kind of cool.
That's awesome. So buy Tesla stock now, because I can see that it's going to spike again. As this continues.
It's funny you say that. I was reading an article this morning about Tesla, and there are several investment advisors that they're like, listen, this Tesla stock, it is obscenely priced right now, but if you're looking long term, 5 years from now, it won't be obscenely priced because the way the speed in which they are developing new technology and implementing it into their vehicles and like some of the stuff that they're doing. I mean, like they just tested all the autonomous driving technology out there, like, and they did side by side comparisons, and hands down, it wasn't even close. Tesla's self-driving vehicles were like miles ahead of everybody else.
Right. Here's the crazy thing. Because Elon Musk understands research and development. And it's not just like what does he have and what can he come up with. He's built a culture of research and development.
Yeah.
Elon Musk sold PayPal, made like $600 million or something like that.
You got 150 million of it.
What's that?
You only got 150 million of it.
Okay. Well, I knew there was 150 million in the story. He makes 150 million and he's like, okay, well, I'm willing to lose a third or a half of that in starting SpaceX. So he's like, imagine your biggest payday ever. The guy doesn't just buy a island in Hawaii, doesn't just, call in rich and quit. He says, okay, I have all this money. I'm going to take half of it and risk it. I'm going to take half of it, not really reinvest it, put it up for a 100% total loss.
You realize that he took the other half and pushed it in on Tesla. Like he had to take loans out to pay his bills when he got $150 million payday. Right. He put all of his money into his. I know, man. It's amazing. The other thing about him that I really love, he reminds me a lot of Steve Jobs in that he is unrealistic with his deadlines and with the performance of his engineers. Right. And he will give them these insane deadlines to get this, to come up with new technology that doesn't exist now and implement it into real life use. And they're like, we can't do this. Lo and behold, they get it done. Right. Time after time after time, they hit these deadlines. And you know what? If it's 90% of what he thought it was going to be, look, it might take an extra year to get it to 100%. But my goodness, that's better than waiting 10 or 15 years for slow development on this stuff.
Right. Respect the hustle. All right. Well, listen, ladies and gentlemen, that is the end of our Friday news roundup. I was gonna tease Note School.
Okay. All right.
But before we go, before I was so rudely interrupted in a Trump-esque side chatter from my co-host Josh Weidman here, I wanted to tell you guys about Note School. This is a free event that Josh and I are hosting and promoting. There's going to be a lot of RIA groups from all over the U.S., and they're all going to be paying to get in. But you, as a dear listener here of the real estate, Build and Grow with Real Estate show, and Josh and I, we say that half tongue in cheek, but we really do think of you as dear listeners. Like we really do. We get texts, we get emails, we get Facebook messages like on what we should do better or what you liked about the show. And Josh and I like screenshot them and send them to each other. And plus we've got like half a dozen to a dozen now, like, group messengers now with different listeners who like check in every day and tell us what they thought about the show. We love it all, guys. And so you're very meaningful to us. And it's why we decided to do this event for free and not charge anything at the door. So it's noteschool.com/BGRES, talking about how to buy and sell private notes, how to find and fund private notes, what is so important about creative financing, and how creative financing can help you not only if there's a real estate downturn, but if there's not a real estate downturn and there continues to be a crunch in available deals out there and you're looking to stretch your marketing dollars and find deals where you couldn't find deals before, private notes is the way to do that. So noteschool.com/BGRES, Build and Grow with Real Estate show. That's how you get in for free.
Awesome. All right. We'll be back here Monday with a new set of content. And by the way, I think next week we're going to be covering something that was a recommendation from one of our listeners. Really good stuff. If you have any comments, anything that you think that would be beneficial or interesting to talk about, let us know. Until then, don't forget to like and share our show. We love you guys. Have a great weekend. Judah, I'll see you Monday. See you guys.
Buddy.